gold has been incredibly resilient to what we have seen, a very sharp run-up in rates since the presidential election, to be fair. In the end, we probably would expect ETF demand to be a little bit weaker in the first half of the year relative to what we had expected. We have changed our Fed view. So we had 4 cuts for this year. I was about to say next year, but actually it's for this year, isn't it? We had 4 cuts for this year. We trimmed that to 2 cuts after the Fed meeting, and that led us to make some revisions to gold in the short term. Realistically, gold is an option asset, right? And given what Donald Trump has been saying and the projection of what his administration will do, we are going to need some optionality, particularly from a diversification standpoint.
Because we have such a short window, December 2025, this year, and end of this year, where is gold going to be?
28.50.
28.50. Okay, so we've seen a major chunk of the gains in the yellow metal so far.
Largely, I would say.
China demand, India demand can change that?
Well, having said that, equity market volatility has been relatively low. Not only that, but we would expect that the dollar will be a bit on a stronger footing in the first half of the year. Rates will be on yields will be a little bit higher in the first half of the year. We do expect that dynamic to start to moderate. That can lift the metal very quickly. In that context, actually, silver is cheap. So when you think about gold, yes, okay, silver is not your traditional safe haven asset. It has much higher volatility, doesn't have those characteristics you get from gold, but nonetheless, it's very cheap relative to gold. And if industrial production begins to pick up, then silver can really get some gravity here.
Absolutely. And just very quickly on the black stuff, what is your outlook for oil?
So oil has been pretty problematic actually leading into the back end of last year. But realistically, we stuck to a positive view of around $80 a barrel or a little bit more, largely because we expect that US growth will be on a bit of a firmer footing. Industrial production will start to actually pick up after a couple of years of pretty difficult times. And in saying that as well, inventories have continued to remain low. And what we hear from the Trump administration, at least so far, is that they're looking at Iran very, very closely in the first few days. That is going to create a little bit more geopolitical risk for oil. And so consequently, we think it can go higher here.
Got it.